We also need to talk about inflation. PPI coming out at 5.1%, and let's get your comments. It's obviously heading in the right direction. PPI obviously not as important as CPI.
Yeah, of course we must also keep in mind that the PPI is going to be changed completely. Hopefully by January next year. We've heard that it would have changed in July this year, but only in January next year. But if we look at the underlying trends and the factors influencing your inflation rate, yes, you know, food prices and energy prices, they've risen, but because we have a high base of last year, this year-on-year rise came in, just over 5%. So one says, oh, you know, this is quite okay. But in the longer term, we have to be careful about what's going to happen to the rand. And this downgrade, added to the political uncertainties, creates an uncertainty. And I think that we have to be so careful that sentiments don't change against the rand. Because then you can't stop it.
Well, this is what I just want to bring a forecast, Bridget. The last time we chatted, 950 wasn't off the cards, was it?
Sure.
It was a probability?
It is a probability. I still think that on a bigger scheme of things, the rand is on a weakening trend. If you look at where it's closed historically over the last couple of months, despite all the positive news that we've seen, which should have driven emerging markets and specifically the rand stronger, we haven't seen those. We haven't managed to gain back those losses. Yes, I think we'll see some strength around WGBI, but I think that we haven't managed to maximize to the levels that we potentially could have, so the upside does remain a risk.
I see both economists are wanting to jump in with their house views on the rand here.
Do jump in, but I wanted to get a sense from Ulrich. Where do you think we are in the producer inflation cycle? Are we close to a bottom, or is there more downside to go in this cycle? Where the risks
actually, if we look at the last quarter of this year, one says, we had a high base last year, and we could see the rise because of the energy costs and the food price increases that we've imported to a large extent. So that can be the case. But then, of course, if we look at the longer, or if we look at this, then we say, yes, it's going to stay around these sort of levels. But for next year, and I'm looking at what I'm also involved with the Bureau for Economic Research in Stellenbosch, and if we look at next year, we say yes, the PPI rate on the new base could be around about 5% or even less than that.
Right.
So actually one could say in terms of what we have experienced in South Africa, it's under control. Yeah. But one has to be so careful, because what's going to happen to the rand, what's going to happen to the imported cost to this economy. Yes. And then, of course, added to that, if we look at wage negotiations and these sort of cost increases, then one has to be so careful with the inflation rate. Of course, if we sit with the inflation rate that's going through the roof, we say, we are going to increase interest rates, then that's further support for the rand, and the guy in London says, I get this nice return on my money into South Africa, so I can go in and out.
Yields go in, increased volatility.
In and out, I think that the big problem to South Africa is that we have, is it 95% or is it 99% of all the capital flowing into the country is of a short-term nature?
Yeah, that's my sense, is that we run the risk of going to 950, but we also run the risk of going to 6 if we have what I call our own Swiss moment. In other words, a flood of capital where you've got negative real yields entrenched in the financial system.
And I tell you, with that view, I'm very glad I'm not running a company that has to make a decision on the exchange rate. We've got 6, 950, it's kind of somewhere in between.
In the next year, it can actually go to both. That's the problem. Is the
Let's not get more confused on the desk this evening. Or a final statement.
I think the most important thing to say to businesses, to South Africa in general, is please control costs. Because you can't depend on the rand to save you. You can't depend on the international economy to save you. You have to control your own situation as far as possible. But that means, of course, job losses.